maybe it's time to start investing. And real estate here in the greater Tacoma area seems like a pretty obvious choice. I mean, people elaborately celebrate real estate investing. You can't help but see it all over social media, HGTV, and everywhere else. In fact, there's a saying that says more millionaires are made from real estate than from anything else. But is it really that easy? In this video, I'm actually going to walk you through 5 reasons why you should reconsider investing in real estate here in the greater Tacoma area. And I'm going to give you my opinion on how these are all going to play out for you. So if this is something you're interested in, stick around and don't forget to wait till the very end, because the last point is one that's going to carry a lot of weight and I really think help you determine if reaching out and investing in real estate here in our local market is going to make sense for you. We're getting after it right now. Hey, my name is Austin, or Austin of Tacoma. Chris, myself, and our team, we're getting phone calls, texts, and emails every day from people just like you. We're looking to make their move right here to Tacoma, invest in the local market, maybe sell our house, and we absolutely love it. So whether you're looking at making your move here in the next 3 days or maybe the next 3 months, go ahead and just shoot us that phone call, text, or an email. We'll help you make that smooth move. And if you want to know everything going on in the local market right here, make sure to just click that little subscribe button and ding the bell so you don't miss a video we put out. All right, number one thing that you really need to be looking out for when it comes to investing is entering into the market. It's a lot easier for someone to buy a share of Amazon at $160 now than it was when it was $2,000. And real estate isn't a lot different. One of the biggest reasons I think you should really reconsider investing right here at home is the fact that our property prices are so substantially high. It can really make the rate of return pretty difficult. With prices being a lot higher, it can take you a lot longer to recoup that initial investment that you made. So, if you buy a house, let's say in a state like South Carolina, Arkansas, Kansas, something like that, where you could buy it for $200,000 and you can rent it out for $2,000 a month, you're gonna recoup that initial investment a lot faster than if you were to buy one right here for $500,000. Let's say your payment was $3,500, but you can only rent it for $3,800 with just $300 in profit. It's gonna take you quite a bit of time to make that money back. When it comes to making your exit on that house as well, you've invested at a lot higher price point. You've had tenants work their way through the house over the past few years. When you go to sell, you're probably gonna have a lot less buyers on hand for your investment property than if you had invested in an area where things were a little bit cheaper. I really don't see the returns out here in the Tacoma, Seattle area being as great as a lot of places that I see in other markets. But here's what I'll tell you. We also want to think about investing in a really long-term kind of plan. If we look over the last 30 years, homes in Washington in general have increased by about 400%. So that's a lot of equity gained over the last 30 years, which is typically where someone's going to hold a home for the life of a loan. However, if we look at those other markets that I mentioned earlier, they're somewhere between 200 and 250%. So you might not get as much rent as far as profit on the front end, but when your appreciation comes into play, you will get a greater amount of appreciation investing in a market like Tacoma than you would in, let's say, rural Kansas. Number 2 has got to be interest rates for me. Now, I know none of us have a crystal ball and can shape the future, but really out here, because of the price points, interest rates really do carry a lot of weight. For example, let's say you have some investment properties out here and interest rates dip pretty low. Now you can go out and you can start looking for more homes. However, now you're going to be competing very aggressively with home buyers who are not using investment type loan. They're just trying to secure a home for their families. At the same time, the homes that you have to rent out, you're gonna see a decreased pool of folks who are looking to rent because now home affordability becomes a lot easier. So if rates tend to tick down, one of the market trends that you can expect if you're looking as an investor here in Tacoma is you're gonna get a better deal as it comes to your investments, but you're gonna be competing with a pool of buyers that has massively grown that is trying to buy up those same exact homes for their families. Now, the other downside to that is as they're buying up more homes, that could create a decrease in the amount of demand for rental properties. And of course, as the decrease for demand for rental properties comes into play, as a landlord, that means you have fewer options of who you can rent out to, which means what we start to see happen is we see rents start to come down, we start to see a lowering of standards for who people rent out to, and that becomes a really big headache for a lot of landlords. Now, on the other hand, what about if rates go high? Okay, so if rates tend to increase, then it's gonna make it harder for you as an investor to buy more property. You're gonna not want to be as loose with your money because the rates are gonna cause those payments to be pretty crummy. Now, all that said, at the same time, there is a positive aspect to this is people are gonna be more open to renting. I think really in the last year, the I'm a renter stigma has gone away. And I think people are a lot more comfortable with the idea of renting homes. In fact, Zillow in their 2024 market prediction said the new first-time home buyer home is actually a single family rental because home affordability has ran away so much. So, realistically, if I can rent a house in a neighborhood for $3,000, or I can buy that same house for $3,800 a month, I might be more inclined to rent. So really either way rates go, you're gonna have your pros and your cons. You just need to really make sure that you are set up in such a way that you can react to that when they come around. Number 3, this is a really overly competitive market. For years, the Tacoma area has seen bidding wars, multiple offers, people going and doing crazy things to get houses. And as an investor, this doesn't change. We just talked about it in the last point about how the interest rates are going to affect how buyers tend to react. And so if you catch yourself in those lower interest rate positions, you're going to be fighting with a lot of buyers for houses. I don't expect that you see really anywhere here in the Seattle-Tacoma area to not be a firm competitive market for a long time to come. It's very easy to get caught up in these bidding wars, inflate prices, and get yourself upside down just to have some kind of investment property. I had a really good friend who spent a lot of time, got into competition with a flip property, not a buy and hold, which is really what I recommend. Got into a competition with a flip property, ended up spending a lot of money and a lot of time on it, and this is right before rates really kind of hit that uptick. Ultimately, when the property got sold, it took longer than they expected, of course, because that's how flips work. They take longer than what you would expect. And out of all that, after about 6 months, made a total profit of about $15,000. Now, as your real estate broker, that is not something that I'm going to advise. I don't think a $15,000 return on a 6-month investment is a great option. And this is why you got to reach out to us. Chris and I know this stuff, the ins and outs, how it works around here. So if you're looking to invest, please go ahead and shoot us that phone call, text, or an email. We'll definitely keep you out of this hot water. Number 4 has got to be unfavorable neighborhood trends. Now, I don't mean a certain kind of people that live there. I mean, we're talking about negative trends in the neighborhood in and of itself. So if we're seeing a higher increase in crime over time, that can certainly impact the comfortability of a family who might want to live in that neighborhood. If we are seeing declining infrastructure around the homes here, that can certainly impact how a family would feel about wanting to rent in that neighborhood. The reality is, no matter how cool an area is in our mind, prospective tenants are likely to try to avoid areas that have safety concerns or deteriorating amenities. It's just gonna make it hard for you to find the people who want to ultimately live in those spaces. And furthermore, like I said, I don't like this couple-year mindset. I like this 30-year mindset. It's probably gonna have a pretty negative effect on your property values as we look at the future moving down the road. So really, before you go and you pull the trigger on a house, really get into that neighborhood. Dig around. What's coming into the area? Are we seeing buildings being rebuilt? Are we seeing an increase in crime? Are we seeing dilapidated buildings coming up more often? Like, look for those red flags, because ultimately this is just like any other investment. If I were to buy a certain stock and I saw that the company had a shaky foundation and a corrupt CEO and a board that was owned by politicians, I probably wouldn't want to put my money into that stock. And buying real estate is absolutely no different. And number 5, the last one, like I said, this is a big one. A lot of people are so focused, especially when they're getting into investing on the front end, that they really forget about the unknown costs that they're gonna have on the back end of owning the property once they sign on the dotted line. Think about things like your vacancy costs. When you transfer from tenant to tenant, there's typically a little bit of time in between there where you do not have anybody in your property, and this adds up. If you're used to making, let's say, $3,000 a month of income, and for 3 months you don't have anybody living in that property, that is going to be a negative of $9,000 right there from one single unit. Most people don't really have that in their heads and are planning for it when they ultimately start this investing journey. If you're right here and you want to do it yourself, that's absolutely fine. But for most folks, having somebody that can be a screening service for tenants, run credits, manage the properties, and ultimately keep things going, which is a property management company, is something that a lot of people elect to do. We want to make investing as passive as possible. This can also cost you between 8 to 12% of your rent. So you want to take that into account when you're looking at your budgeting and looking at your pricing. Property taxes and insurance, those are both things that come into play as a cost that you might not be thinking about right now, but they can fluctuate pretty regularly, especially year from year as assessments go. What I would say is look on the Pierce County Assessor's website to see what the calculation for the next year is going to be, or this upcoming year will be, so you can get an idea of what those taxes will look like, and on a regular basis be talking with your insurance broker about what those insurance costs are going to run you. Also, don't forget about your regular maintenance, your HVAC systems, your filters. All of that stuff are costs that people just really don't add in. And if you take all of those things and you bank them together, especially out here in Washington, the cost for those things can be pretty heavy. So you're gonna wanna make sure you have a really good outline of what those costs are gonna be for you. You can reach out to me. I'll be more than happy to kind of provide you some outlines of what you can expect to be paying for on a single family home. And make sure you factor that in when you're buying the house so that you don't end up getting an alligator property that is going to eat your income and ultimately send you into the negatives here in Tacoma. And that could very easily put a black eye on real estate investing for you forever. And that's not something you want to see. Real estate investing is awesome. So those are 5 reasons why I think maybe you should reconsider investing here in Tacoma. But if you've went through those and you still feel like it is something that could bless you and your family, please feel free to reach out to us. Again, we run a real estate team here in Tacoma, and we don't care if you're looking at making that move here in the next 3 days or 3 months. Just shoot us a phone call, text, or an email so we can help you get started on this journey. Again, I'm Austin of Tacoma, and until next time, I cannot wait till you're out here so we can show you around.